How to invest in real assets by seeking financial solutions in the 21st century. Since the World Wide Web was allowed for civilian use in the mid-1980s, much has changed in the world, both physical and virtual. New social, political, and economic paradigms have emerged, the most prominent of which is undoubtedly the emergence of cryptocurrencies. When the centralized state managed to force the displacement of tribes and chiefdoms as social entities, the monetary element also underwent a drastic change by using the traditional barter system due to the appearance of fiat money, also known only as fiat. This payment system remained static and in place for over 5,000 years, but with the advent of peer-to-peer technology, blockchains, and NFTs, this paradigm is changing radically. Cash or cryptocurrency? A critical decision. Although there is still reluctance among many bankers and investors to bet more heavily on cryptocurrencies because of the mystery surrounding them, many other traders and fund managers see digital currencies as the ideal solution to revitalize the global economy and achieve the desired stability. Bitcoin and Ethereum, to cite the two most representative cryptocurrencies worldwide, have achieved in just a decade what it took many currencies 200 years to do: to be accepted worldwide thanks to their credibility and trust. This monetary expansion, never seen before by cryptocurrencies, is due to their non-fungibility, their exclusivity, and their code based on blockchain technology that makes them unique and impossible to counterfeit. One of the most illustrious fund managers and enthusiasts of this digital currency is Dalio, the founder of Bridgewater Associates, one of the most important investment management firms in the world, and with the largest hedge fund in existence today. The billionaire, who's been in the world of influencers since 1975, says Bitcoin and cryptocurrencies in general are as important as gold and other commodities in a broad and diversified investment portfolio, and that the focus is on a steady upside. Known for his eccentricities and controversial comments, Dalio has no qualms in asserting that cash is currently trash due to the evident constant loss of purchasing power, not only of the dollar, which is the currency with the highest turnover and level of global exchange, but also of any fiat currency in general. In addition to Dalio, many other global economic influencers have appeared, such as Tesla CEO Elon Musk or Twitter founder Jack Dorsey, who have bet on cryptocurrencies, considering them the great catalyst that will democratize the economy and the medium. For many, it might be more wishful thinking than reality, but there are certainly certain signs evident within the financial and economic landscape that might indicate some veracity in these comments. The Federal Reserve's warning. The main sign that fiat money is in an unprecedented crisis is to look at the ultimate economic indicator, inflation. In April 2022, annual inflation for the average consumer reached 8.3% in the United States, just 0.2% below the inflation recorded in April 1982, which clearly indicates the situation is truly worrying. Trying to contain the inflationary tsunami, the Federal Reserve of the United States, better known as the Fed, is applying the traditional recipe par excellence, raising interest rates and thus building a dam to prevent inflation from overflowing. But according to many experts in the field, the Fed is walling itself off from further raising the dam, and many cracks are already opening up that have just flooded the Placid Valley of the US economy and the rest of the first world. Not since the Greenspan era has the Fed applied such aggressive rate hikes, and everything points to the fact that the measures are not to avoid a recession, but to amortize it and create a mild effect on the economy. But according to Dalio and other investors, the impact will be strong, and that is why he insists that investments in assets considered risky should be avoided. Within the financial and investment world, there's been an unchanging mantra for many decades. Never fight the Fed because it's like fighting God. But the sustained tightening has negatively supported stock prices, which, according to Dalio's controversial statements, are also junk. The big question among investors, financiers, and managers is which resource will give a real return in the short and medium term. According to this controversial investment manager, the only profitable thing today is to emulate the policy pursued in the 1970s, when companies focused on real assets such as commodities, valuable metals, or energy investment as an effective way to mitigate the huge loss of purchasing power and capital. optimism in measure despite the uncertainty. It is no secret that the current situation of cryptocurrencies is dramatic. After Bitcoin reached an impressive milestone of almost $70,000 per unit and Ethereum reached almost $25,000 by the end of 2021, the value of cryptocurrencies has steadily and unstoppably declined to an average of $28,000 per Bitcoin and only $2,000 for Ethereum in total, May 2022. Despite this dramatic drop that has further unsettled the jitters in traditional markets and sowed enormous concern and uncertainty among cryptocurrency miners and investors globally, Dalio is optimistic and confident in the face of the challenge ahead and assures that cryptocurrencies, especially Bitcoin, will go on, stronger than this situation. Dalio's optimism seems to be based not on wishful thinking or faith, but on the immeasurable monetary achievements he's made in the past decade. At just 11 years old, the utopian creation of Satoshi Nakamoto, whose dream of financial democratization has spread to every corner of the planet, and as a tangible proof of his optimism, this financial management magnate has invested part of his fortune in Bitcoin. After being skeptical about the capabilities of cryptocurrencies, over the years, Dalio experienced a change of opinion, expressly recommending it as a complementary alternative to other commodities that have been sustained over time, such as gold or diamonds, something that the giant also recommends from the bank sector JP Morgan, which suggests to its large client base to hold Bitcoin as an alternative investment, even over real estate. Despite the obvious optimism and enthusiasm, Dalio also recommends moderation because if cryptocurrencies, especially Bitcoin, grow too fast, the world's governments could decide to reduce their value to preserve their national interests. This is why the founder of Bridgewater Associates says the ideal is to strike a balance where Bitcoin and Ethereum continue to grow, but without jeopardizing their still fragile niche in the global economy, facing the worst inflation in 50 years. One of the boldest pieces of advice offered by many investors is to replace real estate investments with digital assets. In the aftermath of the 2008 crash, where the value of the real estate market plummeted to unprecedented levels, the emergence of cryptocurrencies has become a much-loved lifeline in which many investors are placing their wealth to avoid sinking into the world's inflationary sea. The current inflationary situation, which threatens to be further aggravated by the war in Ukraine and possible global energy and grain shortages, is a palpable sign that urgent action must be taken, and one of them is the search for alternative assets, in this case cryptocurrencies, which function as a hedge fund. Both Dalio and other bankers are currency speculators. The first step is to avoid investing and storing wealth deposits in government currencies as much as possible, and to invest all savings and income generated in the year by buying assets, both real and virtual, as soon as possible, which have strong demand and appreciation fundamentals in the short to medium term, including gold, diamonds, and of course, Bitcoin. Another piece of advice prevalent throughout the world of global business and finance is to avoid investing in traditional financial instruments, such as fixed-term savings accounts or government bond funds, as the current instability of the exchange market, the advance of inflation, and the progressive loss of purchasing power makes it unfeasible to generate returns in these kinds of instruments that were once considered safe and stable, but in the current real instability have become obsolete. The COVID-19 pandemic and its subsequent economic shutdown, the war in Ukraine, energy shortages, and the acute crisis that unexpectedly hit China are some of the ingredients that have propelled this level of inflation, not seen before in the United States since the 1973 oil embargo. Given the dire economic and social situation in the post-COVID-19 world, where telecommuting is becoming the norm in the vast majority of countries, and department stores have suffered considerable drops in retail sales, financial players such as Dalio, JP Morgan, and others recommend building solid and diversified investment portfolios that include mainly gold, today's most sought-after commodities such as coltan, oil, grains, and of course, Bitcoin. The future of investment. After a brief but thorough analysis of the current situation, it is important to be prepared for the possible future of investments in the short and even medium term. The crisis of traditional currencies, where central banks seem paralyzed, and the momentum of the current digital revolution that is changing society's leisure and consumption habits are the guide that is setting the tone for the new global economy and financial dynamics. Cryptocurrency mining, the value of gold, which is the commodity that has survived best over the millennia, and new energy and transport alternatives are undoubtedly the new bulwarks in which to invest to generate the fastest returns in the market. With this last caveat, we come to the end of this video. Don't forget to leave your comments on the topic and send your suggestions so that in the following segments, you can enjoy the content that interests you most. Thank you very much for sticking around to the end of the video. See you next time, folks.